Okay, welcome back, everybody. This is your May market update that is based on the April statistics for the Peterborough, Kawarthas, and Northumberland area. And at a glance, the major headline this time around is that this is a pivotal month and set of data coming in April. We've had a market that was really floundering ever since the U.S. election and all the uncertainty around tariffs. And we saw a marked decrease in the momentum that was happening in fall of 24. And all in all, as the spring data is coming in, we are seeing a slight reversal of the sort of really negative trend that we were seeing, but it's still not fantastic. We're seeing prices down year over year. We're seeing inventory up. And we're seeing what is likely to be continued downward pressure in the short term unless something drastic changes. How we've come to these conclusions and what we're seeing, we're going to dive into now. Okay, so in my spare time, I have been studying some data science and data visualization, and I have realized that the format I've been sharing these slides in, not necessarily the best for a quick learn, and it's much better to have simplified up-down arrows. So I'm going to try and roll with this a bit more going forward. Let's give you the high level of what's going on out there. Sales year over year, basically sideways. That's this yellow arrow, not up, not down. The total volume of sales, very similar to last year, almost identical, uncannily identical to last year. The only problem with that is that the inventory is markedly up, nearly double in some areas when we're talking about the total amount of active listings versus this time last year, which you'll see in a minute. Of course, on account of this, prices are down slightly. In almost all areas, we're seeing slight price decreases, slight to modest, I might say, some hovering in the 5%, which, as you will do the quick math on $1 million listing, is not so modest. That's $50,000 down from last year. GTA, you know, I always like tracking the GTA because as the visualization or expression goes in my mind is that it's like a tsunami. There's an earthquake out at the middle of the sea, and it's not a matter of if it's going to make it to the shoreline. It's when the energy is going to transfer through. The GTA is the epicenter, the hub of Ontario's activity in terms of immigration, economic activity, and there can only be so long of a sustained downturn there in terms of sales, prices, etc., before it ripples through, because all things being equal, people will only pay so much more or so much less. The spread will always remain more or less similar as you move further away from the city, from one city to the next. Their prices drop, Ajax drops, Oshawa drops, Peterborough drops. It just takes time to translate through. So GTA sales and prices starting to show a downward trend here. Macro, this is the macroeconomic outlook at large, and I have been working on a larger, sort of more robust model on this, and I'm going to go with the super simple version here, where it's not fair to just say, you're commonly in these conversations where people say, oh, rates are down, therefore prices are going to go up, but not so fast. There's many things that factor into a properly weighted macroeconomic model, and they would include such things as rates, immigration, employment rate or unemployment rate, new home starts, debt levels, insolvency levels, and debt default levels. This is consumer debt and housing debt, and then the overall GDP and incomes. And in my perspective, when you take this whole picture at large, and if you were to weight all these factors and give them an up or down arrow, all in all, the macroeconomic signaling is downward. It's not fantastic. We have rates, yes, they're lower than they were last year, but they're still structurally much higher than they were when these current prices were created. So a lot of people are rolling over into higher rates. We know that. Immigration levels markedly down. Targets are down. Unemployment is continued to rise. New housing starts are definitely down, but lots of condo inventory hitting the market, which is having an effect on the entire mortgage solvency market, which leads us into debt. Consumer debt is still not amazing. Consumer debt is on the rise. It's not at crazy levels, but it is on the rise. And GDP is still sort of floundering, where GDP per capita has not really been rising meaningfully for nearly 2 years. So people, all in all, more debt, not making any more money. Okay, so the picture at large is that prices are hanging on, but it's very questionable how long that will last for. So enough time for this slide. Let's skip forward. For anybody who's been watching, you know that I'm doing these videos again now on a regular basis, and we are actively taking on new clients. In spite of this market, we are grateful to say that we have sold 9 listings up to this point so far this year. That's myself personally and our internal team of admins. Our team at large, including Tamer Kamara, Sean Pierce, Megan Curtis, Tom Rayburn, has sold much more. That's just the stuff that we have moved personally. So we're active taking on clients, and we're happy to help you navigate this market and get your home sold. Okay, this chart right here, very interesting. I think you'll take some value in this. Going all the way back to 21, you see this massive crescendo up to 22, and then this sort of, the quick slide, and then the slow grind down here of prices. This is cumulative average prices for the year. So not taking any single point in time, taking the entire year's worth of data, calendar year, and averaging it out. And as you can see, we have firmly passed the 2021. We're well below the 2021 prices. And in my own experience, anybody who bought close to the fall of 2021, unless they got a killer deal, those people are basically at or below break even at this point. So obviously there's a big gap of data in here. But that's sort of what I'm seeing is that line keeps moving as these prices go down. But the later into 21 you bought, the more high likelihood that you're upside down. And the earlier in 2021 you bought, the better chance that you can still get out with out losing money, so to speak, if you're looking to make a move. Okay, inventory and months of inventory. This is a great one. For anybody who's new to watching, months of inventory, we track it all the time. Arguably, it's one of the most important metrics in my mind for short-term tracking of what's going to happen with prices. This is the city of Peterborough. We did see inventory getting up around 3 months earlier this year. We had a really weak February, and it has sort of it chugged down in March, and then it's sort of balanced in April. So really not we call that sideways, not a real large increase that we would have expected to maybe see. We might still see it in May because you got to remember we had a really hard winter, long cold weather, and then we had a big storm here. And a lot of people just late bringing their listings on. So we may still see a flood of inventory coming on, pushing this number up. And sort of the same story in the county, just slightly higher to start with, but we've been moving downwards. So that's a little bit positive relative to what we might have expected to see. Now, seasonally speaking, this is kind of in line with what we would normally expect to see, and this number is likely going to continue to rise throughout the summer, meaning that these are probably the best sale prices people are going to get all year. So if you're on the market and you haven't sold yet and you're hesitant to do a price decrease, hate to say it, but now is probably still the best time because inventory will likely continue to come on throughout the year and the amount of buyers is relatively fixed. Okay, into Peterborough's data specifically, prices down nearly 6% year over year. Again, you don't have to be a mathematician to do the quick math on $1 million. That's nearly $60,000 that prices will be down in the same month last year. Sales identical. Wayne Gretzky 99. But look at the listings. 239 active listings versus 179 at the same time last year in the city of Peterborough, and then average prices down accordingly. Peterborough region nearly tells the exact same story. Sales almost identical within 5, and last year was not a fantastic year for sales. And then you see average prices drop accordingly when the listings, nearly 100 active listings higher than there were at the same time last year with the same amount of sales. Average days on market still not terrible. Bear in mind, there is a ton of cancel relists going on, and there's a ton of terminations going on that is probably artificially suppressing this number. Belleville, flat on the year pricing wise, less sales, but as you'll see, the inventory hasn't really creeped up the same way, giving it that little bit of price support that we just don't have here when the listings continue to rise in the Peterborough area. Cobourg, prices actually up 7.1%. Not a lot of sales, but again, not a ton of active listings there. So we're really not seeing the months of inventory rise there the same way we are here. Cobourg still showing to be sort of a fan favorite for people moving out of the GTA that have no particular bias over whether they go to Peterborough, Cobourg, Port Hope, Millbrook. All things being equal, people would prefer to be closer to the water and the 401. So showing a little more resilience than the Peterborough market. Northumberland region, sort of the same story, just a little bit more smoothed out because this is a large catchment. It's going to encompass a lot of the same areas, Cobourg, Port Hope, only of course it's going to pull away from the water and go more inland. Sales similar to last year, actually down 12% though. Just not as drastic as some of the moves we've seen from other areas. But the interestingly enough, active listings are up 600 currently. So, you know, up around 90 active listings, but prices still holding strong. When I do a review of this area, still a lot of large estate homes selling out here in the $1 million plus mark, which could be helping this be a bit more buoyant and artificially push this picture up a little bit. Also, not to mention, of course, the strong sales number in Cobourg themselves are going to help this overall picture. Okay, Kawartha Lakes, sales down extremely here. When we look at the Kawartha Lakes, we're going to push quite north here, and this is just going to show the reduced appetite of people to take really B-level waterfront and cottages like there was in the pandemic. 77 sales versus 121 last year. Even though inventory is relatively the same, seeing a drop in average price, we are definitely seeing a drop in the waterfront pricing all in all. And like I said, some of these B-level lakes and landlocked lakes, prices really starting to fall there. Okay, if you've been watching these videos for the last few months, you're going to be no stranger to this graph that is produced by Rob Marcialago, a Durham region realtor and friend. And you'll see this is the months of residential resale housing inventory. So this is just months of inventory, aka active listings divided by sales, plotted over time. So it's a beautiful graph. You'll see that we peaked in January on most of these graphs. The one I want to pay the most attention to is Durham. And it's the most flat, so that's positive for us. But as I said, all this stuff up around like Toronto Freehold and York region, etc., this blue line here, look at that massive uptick in inventory. That can only happen for so long before we're going to see the same thing happen in Durham, and then that's going to translate through to Peterborough. We actually have started to plot this information internally thanks to the help of Rob in lending us some of his formatting. And, you know, once we have a robust enough data set, we're actually going to be publishing a similar thing for the Peterborough, Kawarthas, Northumberland region, which we're super excited about. Okay, residential resale 30-day rate of reported sales. So this is really just sales data, not divided over inventory. So just purely looking at the volume of sales. You can see how last year, even though it wasn't a fantastic year, just how much markedly lower we are this year. You see that blip of optimism in October, November, and then election hits and tariff talk. Whoa, confidence totally gets zapped. Not to mention we're in the winter, a hard winter at that. Nonetheless, we see inventory rising, sales, rising, but really not hitting levels anywhere near last year. And actually in a lot of these regions reaching like decade plus lows in terms of the total sales numbers. Now, while we're seeing some of these numbers like of course, Toronto condo flatlining, Toronto freehold rising, and we're seeing Durham continue to rise, but seasonally, this is just okay. This isn't really a great rise in the numbers. We should see more of this type of structure, and this is showing a really weak spring. Ben Rabideau, a well-noted data analyst in the real estate space, is speculating that possibly we're just going to have sort of a right translated spring market, and that these sales are going to materialize throughout the year at some point, or they're going to continue to pick up. So who knows? Maybe we'll see a better Q3 than a Q1 this year. It's possible, but if we don't, it's quite plausible that there's going to be continued downward price pressure. Okay, the outlook here. This is the first time in, I believe, 3 months since I started doing these videos again that I've actually changed what this said. It was more or less a carbon copy because the data was the same, so the advice was the same. Now, what I'm saying after looking at this now and really getting a sense that we're getting a weak spring market, if we don't in fact get a strong Q3, sort of tail end and middle of the summer, this is the new advice. So buyers, take your time and find the right thing. That's more or less been static, but it's true more now than ever. There's just more inventory coming on. You really got to be patient. Yes, there are certain price categories like the rural home at 600 with a great yard that are still very sought after, and they're not seeing as much downward price pressure as other categories. But all things being equal, if you have to buy and not sell, you are absolutely in the driver's seat right now. Take your time, get a good deal. Sellers, consider price reductions if not getting 3+ showings a week. This is anecdotal on our own side, but I mean, we're currently carrying 10 active listings. We've already sold nearly 10 this year. And the listings that are going to go, if we're not getting nearly 3 showings a week, we're more or less dead in the water. And what it likely is a signal of is that 2 or 3 other listings that have come on are dead competitive with us, and they've come on lower, undercut us. They're going to move before, and we're just not getting the activity because people pound for pound don't see us as a viable way to get a deal that could insulate them against potential price decreases. So if you're not getting solid showing activity at this point, you're dead in the water. Any of our listings that have sold, there's been solid showing activity more or less right up until the final buzzer where we have received offers. And so if you're not in that price bandwidth where you're getting showings, unfortunately, there isn't too many other options other than to make a move down into doing some price discovery, see where the showings start. Price outlook, of course, nobody's got the crystal ball. But I believe there's lots of this crystal ball talk out there about, no one can predict the future. But I would say it is absolutely unreasonable and irresponsible to not do your absolute best to predict what's going to happen. How is it reasonable to do anything other than that when you're spending your entire life's work of savings and money on real estate? So when we look at what's happening out there, the accumulation of everything that we're seeing, price projections is sideways / seasonal ups and downs. Now, really, the reason this is now yellow is that this forecast is in danger. I would say general to slight downward pressure is now more likely than ever. We're already seeing it. Prices down 5% year over year from last year. So rather than just sideways with the regular seasonal up downs, it's probably going to have that bit of that seasonal shaping, but just chunked downwards on a graph at a totally lower peg. So the same seasonal shape on a graph, but just lower. It's highly more probable at this point that we're going to see, every month year over year where we're putting out somewhere in the single digits of negative numbers of price decreases year over year. So that's it for this month, everybody. I hope you enjoyed the video. A little bit longer than usual, but lots to talk about. If you guys have any questions, if you want to book a consult, if you're looking to buy or sell, if you know anybody who's looking to buy or sell, we do have a new administrator. I got basically 2 full-time admins at this point. We are ramped up as much as we have ever been, and we are actively helping people. We are full on, and we are looking to talk to you about real estate and help you out. So that's it for this time. Thanks, everybody, and we'll talk to you next month. Take care.